Well, good morning, everybody, and welcome to this ERM webinar. My name is Julia Graham. I'm the Deputy CEO and Technical Director at ERM, and it's my pleasure to introduce our speaker for today, who is James Spencer, and James is Director of Health and Benefits, GB, at Willis Towers Watson. So James, thank you very much for coming along and joining us today. We're going to take about half an hour to go through the webinar. Please, to those who are on the webinar, do ask questions. There's a slide up now letting you know how to do that. And as we go through the webinar, we'll do our very best to answer the questions as you pose them. So James, the platform is yours, and I'm going to hand over to you now. Thank you.
Thanks very much, Julia. Pleasure to be here today. We've got hopefully an interesting agenda for those that are logging into the webinar today. Briefly summarised as covering a few key areas: the role for employee benefits in a successful business, covering some of the growing cost pressures on benefit programs for employers both in the UK and internationally as well. And then I think what will be particularly interesting to our risk management and insurance cohort, some of the areas about managing risks, the volatility associated with the provision of those benefits, and also looking forward as to how we're seeing progressive multinational organisations and how they're managing their underlying employee benefit risks. So in 2017, we undertook some research, and the research can be found in the deck, and the deck will be circulated and available to all of those on the webinar today. The research was taking place in 2017 between June and September, and we surveyed around about 1,274 employers across the EMEA region. Here you can see that we found 5 key trends. Looking at benefits and their increasing role in the workplace in attracting, retaining and engaging employees. Also areas such as health and the increasing reliance on financial well-being in the workplace. But areas that we thought would be most interesting and relevant from an enterprise risk management approach were the 3 at the bottom here. Clearly costs are a growing concern, not just in the UK, but globally as well. And we'll talk about some of those pressures and what can be done to manage those. But equally around plan design. And this is really where those from a risk management background may feel most comfortable. This is really around assessing an employer's appetite to risk, how those risks are managed, quantified and mitigated as well. And then around leadership and the role that leadership and different functions in the business have in using data and using benchmarking data to better drive decisions and good risk outcomes. So when we look ahead to the next slide, what we see is that employers are recognising the importance of benefits in driving and improving attraction and retention. And we found from our UK research that around 2/5 of employees agreed that the benefits package met their needs. And here we compare 2 groups: professional services and the broader UK cohort. And for those that are interested, the benefit trends research is available on the internet, and you can see it across different countries and peer groups as well. But what we found was that around 40% of employees said the benefits package met their needs, and that varied ever so slightly between the professional services sector and the UK as a whole. So clearly what we're seeing is there is an appreciation amongst employees. I think there is some work to do, and that cannot just be driven from a top-down approach via HR, but I think it needs collaboration from a leadership style as well.
James, can I ask you a quick question that's coming up, which is, do you see benefits being, we see new skills and new talent being required? And I was talking to somebody only yesterday about trying to attract and retain people who've got analytics knowledge and skills. Do you see any of the people you deal with using benefits as a way of attracting and retaining sort of specialist people like that? Do they find it's an attraction?
Absolutely, and I think that there's a really important point there, Julia, is that historically employers look to differentiate themselves on compensation alone, but actually we're finding is that that has limited mileage for lots of reasons. But we're finding increasingly employers are saying, well, I've got different groups of employees, and we're finding it increasingly difficult to recruit in a particular sector, whether it's those STEM kind of subjects, particularly technical roles. And it may well be that perhaps your insurance company, you're a bank, you're a law firm maybe, and you're looking to recruit people perhaps from outside of your sector that have a very particular skill set. What we're seeing there is that employers are saying, we need to benchmark in a different sector and against a different sector to find what benefits are appropriate for these individuals and what they expect. And that's where we're seeing perhaps some differentiation in the benefits that are offered in a diverse workforce.
And of course, as you pointed out in the 5 points, once you've recruited these people, you want them at work.
Absolutely.
So anything that helps them to get well and quick and back at work is going to be a basic business benefit as well.
Absolutely. And I think there are lots of tools available to employers, some of which are included within many benefits packages, but perhaps not optimized. And I think there's a role there for risk managers and for non-HR professionals at a leadership level to really look and understand what is our data telling us, and perhaps doing some workforce demographics as well.
Good point. Thank you.
So as part of this research, we looked at the 10 key challenges employers are facing within their benefits programs over the next 3 years. And there are a few here that I think will be particularly interesting to those involved in risk and insurance at a senior level. Namely, number 1, rising benefit costs was identified as the key issue for employers, not just in professional services and in the UK, but actually broadly across the region. And it's that visibility of costs and the fact that many of those are external to an employer's own underlying business performance as well. Regulatory changes, which is highlighted as number 4. We know for those that are involved in risk and insurance and many ERMIC members who are involved in benefit programs, that actually the impact of regulatory change is a key concern. Far and far beyond the traditional ones that just impacted pensions alone, we're seeing legislation in the UK and abroad move at an increasing pace. And that's an underlying risk for employers that are failing to manage that and identify it. In some countries, such as the Middle East, there are penalties, not just financial, but operational penalties for failing to get employee benefits right. When we look down the list here as well, we see that actually lack of clear benefits strategy as number 8 was an issue as well for employers. And I think here is a role for not just compensation and benefits and HR to take, but actually at a very senior level for employers to say, what is our strategy for compensation? What is our strategy for benefits? And what are our key underlying risks? Because if you look at traditional insurance programs, it's very commonplace to say, we understand our risks. When you work with employers who are publicly listed and we're looking at their reports and accounts, it's very, very commonplace to identify uncertainties and risks. And actually, there is an opportunity for large-scale employers to say, what are our key people and benefit risks? Some of those will be insurable, many will not be. And how do you address those? So I've mentioned a few times already that the growing cost pressures on benefits, and we see this isn't just limited to the UK. So this graph's quite interesting, and this shows us medical inflation of gross medical trend during the period of 2012 to 2017. So medical trend typically affects employers that offer medical insurance programs and benefits, not just in the UK, but abroad as well. And this is outside of an employer's own claims experience. This is looking at things like the changes in medical technology, the increasing costs of surgeons and salaries. And what we see here is the UK is tracking slightly above the rest of Europe. And this isn't something that we're seeing decreasing. If we look here on the right-hand side, our research specifically asked how insurers expect medical trend in their overall book of business to change over the next 3 years relative to the current position. And we found that 55% were saying it will be higher or significantly higher than today. So again, this is something that employers will struggle to get a grip and control. But actually, if we're saying this is around 5% of the overall issue, what about the other 95% that perhaps can be controlled? So I think with anything, you can't manage what you don't measure. So here, we asked the question specifically, how much did your organisation spend in total on benefits in the last fiscal year. And we can see that in some instances it was less than 10% of payroll, nearly half, but actually, we're seeing that in some instances, 13% of employers were saying between 20 but less than 30% of payroll. And that's a considerable cost and a considerable balance sheet issue for employers. What's more concerning for us, and I think for many of those on the call today, is that nearly half of employers within professional services, as an example, didn't know what they were spending on benefits. So this comes down to the question about where is your data coming from? Who manages that data? Where are the risks held and who's responsible for them?
It's a really important point there, though, as well, because I think people in business sort of look at their property and casualty premiums and those associated with that and look at, well, are we getting maximum benefit and how can we manage those? And yet I think they'd be really shocked if they saw how much their benefits programs cost, because they're often in excess of the property and casualty programs. So what might look like a 5 million spend on insurance is actually nearer a 10 million or more spend. And I remember a risk manager from an airline telling me they spent more money on their employee benefits than insuring the aircraft. So I think A, do you know what it is? But B, I bet you anything where you don't, it's a lot more than you think it is. Absolutely.
And what we've got to remember here is a lot of buyers of people risk insurance and benefits are not technical insurance buyers and are not risk buyers. So here, and we see as we go on through the deck, I strongly believe there's a very good business case for risk managers to add their expertise and offer their expertise to HR colleagues who are perhaps not technical insurance buyers and not technical risk buyers and perhaps aren't necessarily looking for the right things.
Yeah, and I think we'll come on to this, but I think one of the big challenges there, it's a little bit like there are several teams where we think risk managers could collaborate more effectively if people would let them walk through the door. Technology is another one where I think the technology teams traditionally have been left to go it alone, and I think the human resources team can often be the same. It's a little bit of an intrusion. So, it'd be great to explore ways where you can collaborate and work together and be welcomed through that door, which I think is one of the big challenges. And maybe data and helping them to show that they're doing a great job is a good way to do that.
Absolutely, Julia, I agree. And I think quantifying risks is an important part of that. And that's where risk management professionals can really help HR colleagues understand what are our risks, how are we assessing them. Clearly, many of them will be insurable, but actually, what about those that aren't? And how do we address those?
I think you'll probably find too that quite a few people are buying the same thing more than once.
Yes, I think duplication of coverage is a key concern, but also I think, and we see here as we come onto the next page, for multinational organisations, there is often a gap and a distance and no owners of particular insurance benefits or benefits that are provided to staff. So things can fall between the cracks and the gaps there. So one thing that we looked at here is, which levels of business leadership are most important in determining the benefits your organisation provides in your country. So going from left to right here, we see that on a global basis, actually it's quite low. So many employers are not looking at benefits and risks from a strategic, global and unified perspective. We look here on the far right-hand side and we see that in professional services, 90% of those were doing it on a country-by-country basis, and in the UK overall, over 80% were.
Well, I guess that's how a lot of HR departments are organised as well, isn't it? That they have local teams who do their own thing. So it must be a big challenge for the HR departments to get their arms around this subject as well.
I think it is, and actually, Julia, I think it varies between country and country. In many instances, you'll see organisations that perhaps have a small footprint overseas. It may not be an HR or risk person involved. It may be a finance director or an MD at local leadership level.
Good point.
And that creates issues around consistency. That creates issues from an employee relations perspective around equality there as well. But also, it's about optimising economies of scale. And we'll come on to talk about the opportunities around pooling and financing of many of these risks. But actually, if you're buying benefits on a country-by-country basis, are you really optimising your scale? What about regulatory issues? What about duplications of coverage that might be problematic there as well?
So can a big international broker like yours, can you go in and talk to people locally? If you buy something centrally, do you have local offices where the local people can pick up the phone and get somebody from just up the road to come in and talk to them?
Absolutely. I think that's almost expected now by many large multinational employers to have advisors, whether they be professional advisors, tax accountants, or employee benefits and brokers to support that in local countries. Because if we're just looking at it from a headquarter lens here in London, actually that may not be appropriate in local country. You know, we see this time and time again. The pace of regulatory change in other countries is such that it's impossible for many, UK-based HR and benefits professionals to be able to support that on a standalone basis. Really, we can provide coordination, but actually it's our local colleagues who can align with local employers and really support that local advice, which is critical to success. Julia, I mentioned it earlier, but I'll say it again, you can't manage what you don't measure. And I think herein lies the greatest opportunity for those professional risk individuals in businesses. First of all, look at data and the use of organizational analytics to test the effectiveness of programs. We're seeing that 62% of the respondents within this survey were saying that's what they were looking to do over the next 3 years. And that doesn't just come from your insured programs. Actually, this is an opportunity to collaborate with finance, with HR, with company secretarial, to really understand, what does our workforce look like? How does that vary from country to country? And what are our changes and challenges and expectations in the coming 3 years to really manage that? And that could come from a variety of sources. So clearly here on the right-hand side, we saw over 30% of employers using medical claims data and benchmarking information to help drive those decisions or changes in health and wellbeing programs. But actually, it comes down to HR information software and systems. Where are we getting information from? What is our absence data telling us? What are our employee surveys telling us? What do we have on the corporate risk register? Aggregating that data and saying, this is what our benefits profile and risk profile looks like for people in these countries. That's a really, really good starting point. And we're seeing increasingly employers want to audit that information, because be it through merger and acquisition, be it through legacy arrangements that employers have had in place, you expect things to just tick over. But actually, with the pace of regulatory change, growing cost pressures, and more sophisticated financing mechanisms, there are real tangible opportunities to use that data to help risk and insurance and HR buyers drive better decisions that are more bespoke and customized to their organizations. So this brings me, I guess, quite nicely on to how we're seeing progressive multinational employers managing their benefit risks. So herein are the opportunities to collaborate. We often see and refer to benefits, I think, Julia, here as something that HR have always dealt with. But actually, as spend increases, it gets on the board agenda, and CFOs and finance directors are increasingly questioning the value of benefits and challenging the status quo. They're saying to HR professionals and some risk buyers, how can we drive more economies of scale? How can we benefit from maybe global arrangements that are in place? And what opportunities are there to self-finance some of these risks as well?
So on the self-financing, you're sort of alluding there to people using their captives. Because we have members who do some very sophisticated things with their captives, but again, it's still quite limited use.
Absolutely, it's definitely at its embryonic stages. We're seeing large-scale organisations use captives to underwrite or a number of benefit programs globally, and clearly that's an opportunity where significant savings are available. But actually, it's about control.
You use the word program. Are there particular covers that people put in captives?
Absolutely. We see the most prevalent ones, Julia, as those that are typically profitable, and that will vary from organisation to organisation. But the most common ones we're seeing are things like long-term disability programs or income protection in the UK. Life assurance is quite popular as well. Ones that I would see as perhaps slightly more problematic might be expat or international medical programs, because they're incredibly volatile. So that might not be an attractive risk to put into a captive. And there's that decision. what is the optimal financing approach? And I think as we come on to this, there are opportunities to really assess that, particularly for organisations that have significant spend in the benefit space.
Mm.
So here are some of the different financing solutions that are available. And you mentioned captives there, Julian. We see that as an emerging trend. But clearly commercial insurance and fully insured arrangements for employers that perhaps don't have the large scale in numerous countries. But then, we also see cross-border or multi-country plans available, as we see multinational pooling available, which is really an opportunity here for employers to start leveraging their economies of scale and get greater control from a central governance perspective. Self-insurance is still prevalent, although what I would say is that the use of captives and self-insurance can be very effective, but in many countries such as the Middle East, we see that region being quite problematic because there are local legislation that means that actually only onshore or approved insurers can underwrite risk, which makes it more difficult for employers that are looking to self-insure some of that on their balance sheet or use captives.
Is there a sort of progression that you dip your toe in the water with some of these before you do others? So maybe you look at pooling before you look at captives. I mean, is there a sort of journey that people tend to go through?
I think so. I think that's quite critical to say. We wouldn't expect an employer to jump straight from a very traditional fully insured model where they absorb no risk, going straight to self-insurance or going to a captive, simply because of the capital requirements that are required to set it up, and simply because perhaps they don't necessarily have a well-governed program. So what are you going to put into your captive? What are you going to self-insure? Where's the claims history? And why are you choosing to put those covers under a more risk-based strategy? And I think what we've got here is we've got a nice continuum. So there is a balance between cost, risk and control and risk transfer. And this will vary from employer to employer.
So this is sort of the thing I was referring to. So this is really helpful, I think. I would almost sort of take this one chart and sort of single that one out, because this is a great route that you could use when you're talking to colleagues about explaining what you might be able to do.
Absolutely. And this is interesting, I think, because we can see here, particularly when you're talking to finance colleagues, I think, who are interested in maximising assets, maximising cash flow, making things more efficient, we're seeing here a continuum from left to right. So moving from fully insured models where in many markets there are limited savings available because there are slim margins. But actually, when you look at things like traditional multinational pooling, you don't need to have tens of thousands of employees in 25 countries. You can start with a more modest program there and start looking at, well, how do we amalgamate programs and how do we look and identify pooling networks that are most attractive to us and align with our geographical footprint, all the way through to things like global underwriting, where you might select one large insurer, a composite insurer perhaps, to underwrite large-scale programs and provide you with that central approach and maybe greater profit and loss management and accountability there, all the way through to the use of captives with reserve transfer, and that's really going to give you the maximum cash flow potential. We're also seeing employers start using self-insurance and become more comfortable there.
Yeah, I mean, and again, it goes back to your point about data. You can't really start that journey because you've got no idea the baseline for potential savings until you've been able to capture. So it seems to me what you're saying is it comes right back to the whole subject of working out what data you want, trying to work out how you can get that data, and then you can start that journey because you've got no idea what your baseline is for savings otherwise.
Absolutely.
So I'm sure you're going to sort of give us some ideas about how you can capture that data and what organisations like yours can do to help achieve that.
Absolutely, Julia. So I think we're seeing employers of all shapes and sizes now put a stake in the ground and say, we need to review and we need to benchmark and audit what our local or global benefit programs are. And we're seeing that as step one in identifying the quantum of opportunities for savings, the risks that are involved, compliance concerns and considerations, but also the financing mechanisms. And time after time, on a regular basis, I'm finding employers say to me, we really need to do this now. And actually, we're finding that that gives employers, particularly those involved in risk and finance, an opportunity to exert a greater level of control over programs.
Mm. Those are big figures.
Yes, and I think particularly of interest to finance and risk professionals. So we're seeing here that our most recent research tells us that well-managed pools can achieve savings of around 15% or more. And again, that doesn't necessarily mean a huge amount of risk transfer. So multinational pooling can include risk transfer, but actually you can have quite a conservative approach to taking on more risk when you're doing pooling. Often it's just about identifying common vendors, common insurers and common markets that you can use. And I think that's a real opportunity for employers of all shapes and sizes. And then of course those larger employers, maybe they already have a captive financing approach available for some of their property and casualty risks, but actually we're seeing there those that are willing to take on more risk can achieve savings of up to 25%. However, we must concede that there are additional governance requirements and additional costs required to maintain those. But actually, perhaps for those employers and those organisations that already have a captive and that are perhaps dipping their toe in the water or starting to do some benefit lines, they're the ones that can really identify what those savings are and get that economies of scale.
There's a big debate about savings because I think in the sort of digital future, one of the big levelers that digital will mean is that cost becomes much more of a level playing field. And I think what some of these programs, certainly in my experience, have been able to do is to help you improve quality. And certainly the international programs, if you've got portable people going around the world, having a baseline international program means that wherever they go, you don't have to put in place something different because they take the benefit program with them.
Absolutely.
So I think there's some huge, that's also a cost saving, but I think it's a bit less obvious.
Yeah, I think so then. And I also think it's good governance to be doing that as well.
Yeah.
Typically, you're finding that leadership and almost the level below that will often be non-nationals in a country, will often be globally mobile, doing projects and secondments for a period of time. And you've got a group of individuals there that are still going to need the core benefits. They're going to need a global medical program, life and disability. And actually, this is where there's that divergence between what's appropriate locally and what's needed for globally mobile individuals as well. And I think that that's a real area of specialism of Willis Towers Watson, but also a real risk of getting it wrong.
Yeah.
So really the last area I wanted to talk about here was, again, a trend we're seeing between employers moving from a more traditional approach where it was just calibrating premium savings to actually looking at what's best practice. So here on the left-hand box, we see that it was done at a subsidiary level rather than a group level. Okay, so where we saw historical mergers and acquisitions, a lot of employers still had different opcos who were buying risk and buying insurance and managing that at a local level. But actually here is an opportunity to manage it centrally and also for companies to really issue a mandate and say, here's our preferred pooling arrangement, here's our preferred advisor or broker, and deliver that centrally because that gives greater governance and actually drives some real economies of scale and savings there. But also we're still seeing a tactical approach in emerging best practice where actually there's a focus on collecting key data at a local level and we're seeing that management time spent on data analysis and cost containment is increasing there as well. So actually it's less about what's our top line costs, but actually how do we change those costs and control those better.
Thank you.
Thanks, Julie.
So I think that takes us to a conclusion. We've sort of covered some questions along the way. A couple of things I wanted to just remind people about. Do take a look at the ERM Explained Employee Benefits and Managing Associated Insurance Programs. Trips off the tongue, that, doesn't it? Explain guide that was produced with the help of you and your colleagues. This has proven to be very popular with our members and it is online, freely available. Go and have a little look at that for those who are listening in if you want to know a bit more about the subject, because it's full of information which I think is a good platform to then develop some of the thinking that you've covered today, Jamie. I think the second thing is you mentioned that people can have the slides, and I think there's a link to the report that you referred to is embedded in the slides, and therefore once they've got those slides they can ping on that and get hold of the report that you're referring to.
Absolutely.
I have had a look at the report, and it's well worth downloading and having a quick look at as a way of learning a bit more about the subject. So I urge people to go and do that. We're running a number of projects with Willis on this whole subject of people and people risk. So ERMIC members, keep your eyes peeled. And I think the only thing it leaves me to do, James, is to thank you very much, James, for coming in today and to sharing your thoughts with us. Really nice walk through some of the issues, and I think hopefully it will tempt a few more of our members to get involved in the subject, because I remain a bit disappointed that it's only just over 20% of ERMIC members get involved in people risk and benefits, and I can't really understand why that should be so low. So anything that you can do to help us, we may well pick up the phone and ask you.
Absolutely.
So I'm going to draw it to a close there. I just want to thank everybody for dialing in today. Thank you for giving up your time, and then a very special thank you again to James for being with us here today. James, thank you very much indeed.
Thank you.